What would you do if you were mortgage-free? Most homeowners dream of the day that they can ditch their payment, freeing up so much space in their budget for other spending, saving, and investing. But what does it take to make that dream a reality? There are many different approaches to becoming mortgage-free faster. One sometimes overlooked strategy is exploring biweekly mortgage payments versus monthly to see if adjusting your payment date can fast-track you to debt freedom. To see the impact of biweekly payments, it's important to understand exactly how a mortgage payment works. Then you can crunch the numbers to see if the results of biweekly mortgage payments versus monthly payments make sense for you. Let's explore to see if this option is right for you. Before we do, please consider giving me the YouTube triple thanks as you're watching this video. That's hitting the like button, subscribing to the channel, and then commenting down below. I'd appreciate you considering it as I am looking to grow this small business of mine this year. Thanks so much. I appreciate it. Okay, let's first talk about the anatomy of a mortgage payment. Understanding the anatomy of your mortgage payment is the first step in accelerating your payoff journey. A mortgage payment has two parts: principal and interest. The principal of a mortgage is the amount of money that you borrowed to purchase your home. The interest is what you pay the bank or your lender for loaning you the money. Interest rates can fluctuate depending on when you take out your loan. Regardless of the rate, the more money you borrow, the more money you will pay in interest. Depending on how your mortgage is structured, you may also have property taxes, homeowners insurance, and even private mortgage insurance bundled into your mortgage payment. If you escrow your account, the lender sets a portion of your payment aside for taxes and insurance. When the bill is due, they pay it on your behalf. Let's talk about how using an amortization schedule can help you understand more. Your current mortgage bill will have a breakdown on it that indicates how much you are paying towards the principal and how much you're paying towards interest. Someone at the start of their mortgage payoff journey is going to pay much more on interest than principal. To take the guesswork out of what you're paying and when, you can check your amortization schedule. This is a table that breaks down each of your regular mortgage payments by interest and principal over the life of your loan. Using this table will help you see how you gradually pay less toward interest and more toward principal over time. Let's do a quick example so you can see how that table breaks things down over time. I'll put in some of my original loan details from when we paid off our mortgage early. By the way, you'll find this calculator in a blog post of mine in the description below, so check it out if you want to play around. Or honestly, you can just Google mortgage amortization calculator and you'll find one. Anyway, we had $195,000 for our original loan. Our loan term was 15 years. Our interest rate was 3%. Now you can do the calculation with additional monthly principal payments. Like we did. On average, we threw an additional $3,000 per month, so I'll add that in here as well. We hit calculate, and voila! Here's the schedule details from month 0 all the way through month 48. Now you can remove the extra payments and see what your loan looks like without it, so let's do that. Extra payments are now 0. Hit calculate, and voila! New amortization schedule. Month 0 all the way from 15 years or 150 or 180 months for that matter. I like 48 months versus 180 months, but that's just me. Anyway, take your loan numbers and play around here. It's fun to see how fast it can all go. Paying off your mortgage early has a ton of benefits, including saving you tens of thousands of dollars in interest, as you can see from that schedule we looked at. As a result, many people are interested in early payoff strategies. For some homeowners, making bi-weekly mortgage payments can play an important role in this early payoff. Let's talk bi-weekly mortgage payments versus monthly. If you're working on becoming mortgage-free, you're probably wondering how to accelerate that journey, right? Understanding how you currently make payments and comparing them to a different payment schedule can help you see if this strategy might work for you. Most people are familiar with monthly mortgage payments, right? That's an easy one. Monthly payments are typically how mortgages are discussed when you're in the process of buying a home, and very likely how your loan is set up. Monthly mortgage payments make sense for a number of reasons. They're the most common kind of payment. They align with monthly budgets. The payment due dates are consistent from month to month. It's more similar to paying rent monthly, which can help transitioning from renting to homeownership and make it feel more comfortable and familiar. If there are so many advantages to monthly mortgage payments and they're the most common kind of payment, what's not to love, right? In a word, interest. When it comes to biweekly mortgage payments versus monthly, monthly payments will cause you to pay more interest on your loan. While it might not seem significant when you compare one monthly payment to two biweekly payments, when it's multiplied out over the life of a 15-year or a 30-year loan, that's some serious money. Let's learn about biweekly mortgage payments to see if you should make the switch. Another mortgage payment option is to consider to pay half of your mortgage every 2 weeks. These biweekly payments might add up to the same amount as your monthly payment, but the money is distributed differently. As a result, bi-weekly mortgage payments can help you reach debt freedom faster and save you a lot of money. Here's how. When you make a monthly payment, you pay your mortgage 12 times per year or once per month. When you pay bi-weekly, you make a payment every other week. That means you make 26 payments instead of 24. Those 2 extra payments shave off an entire mortgage payment without you or your budget even noticing. Let's use some simplified math to see how this works. Imagine that you owe $2,000 a month on your mortgage. When you pay monthly, you make 12 payments of $2,000 for a yearly total of $24,000. However, if you pay every 2 weeks, that means you are paying $1,000 every other week. Since there are 52 weeks in a year, a bi-weekly payment calendar would have you making 26 payments of $1,000 for a yearly total of $26,000. By using the calendar to your advantage, you now have a mortgage principal that is $2,000 lower to start the following year. A whole mortgage payment erased and a smaller principal to pay interest on. It's a win-win. So if the math looks so good, why doesn't everyone pay bi-weekly? Well, before you hop on the bi-weekly bandwagon, there are some considerations that you want to make. Not every lender allows for bi-weekly payments. In many cases, you have to opt in to enroll into a bi-weekly payment program. In that instance, you may incur a fee. Before you opt in, you want to crunch the numbers to make sure that you come out ahead. Obviously, for bi-weekly payments to make sense for you, you have to ensure that your lender allows for them. You also want to note that paying bi-weekly won't bump up your credit score. While it may seem like the credit bureaus should throw some brownie points your way for making additional payments, this isn't the case. When the bureaus review your data, they use a monthly time frame. Making bi-weekly mortgage payments isn't the only way to pay off your mortgage faster. In fact, if the fees are too high, you may also explore if you have the ability to make extra payments to your mortgage. While it doesn't work the exact same way as paying bi-weekly, it's another strategy you might consider to pay off your mortgage faster. You could also consider refinancing your loan to obtain a lower interest rate or doing a mortgage recast to create smaller monthly payments. For more alternatives and inspiration, check out the steps that we use to pay off our mortgage in under 5 years. I'll put that link in the description below. There's no perfect pathway to debt freedom that works for everyone, my friends. But learning from the stories of those who have already paid off their mortgage early can certainly open your eyes to all the different options you have. In closing, a lot of us, we don't think twice about when we make our mortgage payments. We get the bill, we make a note of the due date, and we pay it. But exploring bi-weekly mortgage payments versus monthly might allow you to painlessly shave a whole extra mortgage payment each year. To see if this bi-weekly strategy is right for you, crunch the numbers and make sure to watch out for any possible fees. It's very possible that this strategy will help you pay off your mortgage early without paying any extra per month. But enough for me, I would love to hear from you. What do you think of bi-weekly mortgage payments versus monthly? What strategies are you using to pay off your mortgage? Please let us know in the comments below. This is Andy Hill from Marriage, Kids, and Money, signing off. Carpe diem.